banks, well, they're stealing your money. But you know, for centuries, we've been taught to give up control of our money to the banks. I mean, think about it. We go out there, we trade hours for dollars, we work hard, we make money, and we deposit it in the bank. That's just the normal. But let me go through and prove to you why what you're doing is not in your best interest. So let's just walk through the banks. I mean, you're very familiar with this. You walk into the bank with your hard-earned money, you make a deposit, the bank takes your money and does what with it? We'll cover that in a second. But it's a safe and reliable system. You know once you put your money there that it's FDIC insured. You also know that well, at least you think, you're building a relationship with that bank. And in some situations, community banks, credit unions, you are actually building a relationship. But now your money's there. So what happens when you want to buy something? Well, you go back to that same bank and you ask them if you could borrow money. Now, I see this all the time. A lot of times people actually have more money sitting in deposits than what they're actually needing for a loan, but they still have been conditioned and trained to go back to that bank and take loans. And that's usually okay, as long as you're perfect credit or close to perfect credit. You've got all your ducks in a row, your credit score is where it needs to be, and yada, yada, yada. You take a loan, and then for that loan, what do? You make payments back to the bank in which they keep all of that money, principal and interest. You just got the car, the house, the boat, whatever it is you borrowed money for. Another nice thing is the money that you have in the bank, your deposits. I mean, that's collateral, right? It's feel-good money. You get your statement, you go online, you look at it, and you're like, oh, yes, my emergency fund. I've got cash in the bank. I mean, that's actually a slogan. So you love that feeling, the emergency fund, the collateral when you need to do it. So much so that we have gotten so used to doing banking online that we set up all of our payments on there. I do the same thing. You go on, you set up your bill pays, you set up all your transfers, you have money going every which way, money's coming out. Heck, I bet you most people out there don't even know what money's coming out of their account. They've set up all these automated withdrawals from their account. They don't even look at it. And, I mean, did I mention FDIC insured up to $250,000? Come on! You can't lose any money. I mean, even when those banks went belly up, well, FDIC kicked in. Now, don't go online and look up FDIC insurance and see how much money they actually have, and then figure out, like, is there enough to cover all the deposits at $250? You don't want to go down that road. So, nonetheless, you feel good about it because you've been taught to feel good about it. That's just what happens when we are conditioned that the banks are on our side. They're there for our convenience. They're there to make us money. They're there to benefit us, right? But what if the banks weren't on your side? What if the banks just took your money and did whatever they wanted to make more money for themselves? What if the bank wasn't there for your convenience, for your benefit, for your security? What if the bank was all about the bank? How would you feel about that? The same as you do now? Or would you start questioning things? What if I told you that banks make 400 to 1,300% more than you do on the money that you leave there? Does that make you start thinking a little different? Because that is as per BauerFinancial.com. You can look it up yourself. So in today's video, I just want to give you the 5 ways banks own you. They literally own you. But we're going to talk about the 5 ways to beat the bank, to be the bank, and not need to rely on the bank for just about anything outside of running your money through their system. Let's dive in. So let's dive in. The number one thing banks do that proves that they own you is they fee you to death. Think about it. You've got ATM fees. What do you got? You got overdraft fees. What else you got? You got transaction fees. If you deposit too much cash, I think there's a fee for some banks for that. You've also got withdrawal fees. Yes, some banks actually charge you to take withdrawals from your money, but you see it doesn't stop there. Now, if you want paper statements, there's a fee for that. Fees, fees, and more fees. But that's okay, right? Because the bank's there for our benefit, so they deserve to make a little bit of money. Let's move on to the second way banks own you. So number 2, interest. Let's talk about interest in a couple different ways. The interest they pay you, you think of it as a good thing, but is it really enough? How much is your bank paying you in interest? How much money are you making from the bank? Is it 0.5%? Is it the 10-year average of about 0.42? Do you have your money sitting in a checking account earning 0? Or are you in one of those high yield savings and you're like, yes, 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 I'm crushing it getting 4%. How much are you making in interest? Well, I can tell you this, it's not enough. Because on the flip side of that coin, let's look at your loans. The loans that the bank charges you interest. Let me just ask you a question. You can put this down in the comments. Does the bank pay you more in interest than they charge you on the loans you take from that bank? Like, if you deposit money in a bank that's paying you 4%, let's use one of those high yield savings, they're paying you 4%. Are they charging you more or less than 4% for a loan right now? There you go. More. It's always more, because that's how banks operate. They make a spread. They pay you 4, they charge you 8. What are they making? 4 points in the middle. For doing what? For controlling your money, because we forgot about that. You see, you gave up control. But we'll get there in a second. We're just talking interest. The banks have us so conditioned to take our money, put it on deposit there because they pay us a little interest. They've even got CDs. Yes, they have CDs, certificates of deposit. Lock your money up for 6 months, for 8 months, for 12 months. Heck, give it to us for 5 years. And we'll pay you a higher interest rate. Have you ever wondered, how do the banks actually pay you those interest rates on those high yield savings, those CDs, or whatever you got your money in? You ever wonder that? Because it's not very complicated. The bank goes and buys bonds from the US government, treasury bills if they're short-term, treasury bonds if they're long-term, and they do the same game they do with your deposit interest and your loans. They make a spread. If they pay you 5 on your CDs over 5 years, they went out and bought a 5-year or something similar in terms of a treasury bond that pays them more or less than the 5% they're paying you on the CD. You nailed it. Ding, ding, ding. They are making more than 5, guaranteed by the full faith and credit of the United States government. Spread, spread, and spread. Oh, but did you figure the other part out? They're using your money and my money and Jordan's money and Brandon's money and Jason's money and everybody else's money to do this. You see, they're not even using their own money. Yeah. Yep. Oh, how is that possible? Well, you gave up control of it. You don't remember that when you signed the documents to open your checking or savings account? What did they do? Well, they made sure you knew you were giving up control. Well, not in those exact words, but that's what you did. Now, just to prove that, and then we're going to move on. When a bank makes a loan on a car, did they have to call you, the depositor, whose money they're using, and ask permission? Hey, John. Yeah. Hey, go. Doing great. Yep. We got more dumb suckers. Next time you're in, we'll give you a bag of them. Okay. Hey, John, we were thinking about lending your money out on this fancy sports car here. Is that okay with you? Did they call you and ask if they could lend money on that sports car? If they could lend money on that credit card? If they could lend money on anything? Absolutely not. They didn't have to, because you signed off the rights. You gave the bank control of your money. But I beat that one to death, so let's move on to the next one. Number 3, how the banks are controlling you, owning you, whatever you want to call it. Number 1, they have us so conditioned to just put money there and leave it sit. Don't touch it. CDs, yep, leave it there. All the different things, leave your money there. They actually incentivize you to make sure you're leaving your money at the bank, so they can use your money to go make the spread, so that you don't have the money to use for an opportunity. You are missing out on the opportunity to earn more on that money. Yep, you are. Unless you are literally going out there every month and searching through all the banks looking for the highest interest rate that the banks are paying and switching your bank accounts. Are you doing that? Every month. Are you going out there every single month, finding the highest interest rates paid on bank accounts in the entire United States, and then moving your money into that highest interest rate so that you're always capitalizing on the bank that's paying the most? You're not? Say, what? I thought everybody did this. Well, you see, sorry, shameless plug, but that's exactly what we do at PMC Wealth. We literally search thousands of banks every month, finding the highest interest rates. We aggregate them into the best return. Yeah, we do that for our clients. Why are you not doing that? Oh, it takes too much time. Yeah, well, that's why you're missing out on the opportunity for your money to work harder for you. Number 4, I know all of you probably feel the same way I used to. You know, things were going so good. You were depositing money in the bank, you're building a relationship, getting your dum-dum suckers smiling inside the bank, smiling out of the bank, and you went in there and you're like, I just need a loan. And then another. Oh, how about a credit card? Actually, they may have just offered you a credit card. Sure, I'll take that credit card. Sure, I'd like some more points. Yeah, give it to me. And you walk into another furniture store and you're like, oh, wow, we really need a new bedroom set. Oh, you finance. Well, that's our bank. Yeah. And then you take out a financing deal for the furniture and on we go. And all of a sudden, at the end of the day, I should say, the end of the month, all the bills come due. And you're sitting there saying, I've got this much, but I'm giving out that much. What's left? It started like this, then it was like this, and this, and this, and this, and this, and then you barely even make ends meet. Welcome to 2025, because that's about where we're at. People literally are struggling to make their payments. People are defaulting on their payments. People are delinquent on their credit cards, their car payments, their home mortgages. Why? Because they're squeezed. Price of goods have gone up, services have gone up, everything's gone up. They call that inflation. And our bills still continue. We have to keep making those payments until you can't. And then that bank that was set up for your benefit, for your convenience and all that good stuff, does what? Well, they're not your friend anymore. They start sending you demand letters. They start charging you even more in interest and penalties and fees. Yeah, remember number 1, fees, and more fees. That's a fee too. And then when you can't make it anymore and you just throw your arms up and you're like, I can't, they come and take your shit. They take your car. They file for foreclosure on your house. They just take everything back. But they already took your money, but it wasn't enough. Whose fault is that? Now, I'm not going to say that's not the person who got themselves into that situation's fault, but it was also the bank's fault because the bank kept lending you money. The bank kept asking you for more deposits. The bank kept locking up your money in these vehicles that you can't access it, so you're missing out on the opportunity. And the bank made it so that you really need to have the money just sitting in our bank in order to get those loans. So that money wasn't working for you, or at least not working hard enough for you. And the final thing, well, they freeze your account. When all that stuff comes down and you're squeezed and you can't make ends meet and you're delinquent and you're defaulting and all that good stuff, they just freeze your accounts. Or if they don't like what you're doing with your bank account, they just freeze it. Or if you're sending payments to some other bank and it looks like it's too much money, and you don't answer that question that they send you, hey, did you authorize this? I know. It's just for your protection. They freeze your account. Has anyone watching this video had their account frozen? For no real apparent reason, because I have. And there was no reason for it to be frozen. It had hundreds of thousands in it in good standing. I used the account every day. They froze it. Oh, it was for my benefit though. Potential fraud. Oh, fraud, why? Because we had deposits coming in from regular business activity and payments going out, and the bank looked at it and said, oh, something not right here. Not everybody has money coming in and money going out. We're going to freeze the account until I had to then get on the phone, which took forever, explain what it was, and then they unfroze the account. So who's in control of the money if they can do all those things? Is it you or is it them? Now that we've covered all this, how many of you want to take back control of your money? How many of you want to be the bank now? Because, hey, the bank's making the spread, making all the money. Wouldn't you like to make the spread? I hope the answer was yes. But with that yes, I need another yes. And that yes is to click the subscribe button. And also there's a little bell up top. What I'd love for you to do is, in that bell, I'd love you to make a deposit. No, I'm just kidding. All I want you to do is smash that bell so that you're notified every single time we put up a new video or we go live, because every one of those new videos and every one of those lives is there to tell you how to take back control of your money. So let's just hit on those 5 ways the bank owns you. Number 1, they fee you to death. Number 2, they charge you interest and pay you interest, but they don't pay you enough interest and they charge you more interest. And number 3, they want your money to sit in the bank, which means you are losing opportunities. Those opportunities, they aren't coming back. Number 4, they lock you into payments for all those loans, and those payments don't have any flexibility, which squeezes you. And number 5, they have the ability to freeze your accounts. Yep, those are the 5 ways they own you, but let's reverse engineer how you can be your own bank and take back control of your money. Number 1, you gotta change where your deposits and your savings goes first. Because if you know how a bank works, well, and you wanna be the bank, you can't do it when using their bank. You have to use your own banking system. And you can just look at the wealthiest families in history and how they've done it. And it ain't a bank, folks. It's a giant mutually owned life insurance company using a specially designed and engineered whole life insurance policy. That is where you're gonna change one thing, and you're gonna deposit your money inside the whole life. But again, it is not a normal off-the-shelf whole life. Number 2, you are gonna do all the same things you do now. You're first gonna capitalize your bank, which we talked about, the one change. But then we're gonna add one step, and that is when you wanna buy things or pay off debts or anything else that you would need money from, you're going to go to your bank and you're gonna borrow money from your bank. Got it? Number 3, you're not gonna lose the opportunity to earn. So let's go back to your regular bank first. This is the easiest way to explain it. You deposit money in your bank, but then you wanna buy something and you're gonna pay cash. So you take the money out of the bank. Let's say the bank was paying you 4 when the money was there, but now you took the money out of the bank. Is the bank still paying you 4? No. Okay, that was the exercise. So what if you could take your money and put it into your bank, that specially designed whole life, and let's just call it 4%, although it's more like 6% today. Let's say you were making 4%, but then when you wanted to buy something, you took the money out, but you took it as a loan. Okay, we'll get to that in a second. You took it as a loan, but your money never left the account, so therefore it never stopped earning compounding interest. So now that compounding interest is earned uninterrupted. But the loan you took to buy whatever it is, you buy it. But instead of skipping the rules and not being the bank, you treat your money the same way you treat the bank's money, and you make payments back to your bank for the exact same amount you would have paid their bank. So hypothetically, you put money into this policy. You want to buy a car. You take the money out to buy a car, but you took it as a loan. The loan, they do charge you simple interest, but it's a lower rate than what they're paying you. We'll get to that. Spread number 1. You buy the car. You make the same car payment you would have made to the finance company or to their bank, but you make it back to your bank. So now who's in control of the money? You are. Who gets all those payments? You do. What's the only thing you lose? The interest paid to the insurance company. But if the interest paid to the insurance company is a lower interest rate than the interest or dividend crediting rate they're paying you, well, what are you making? A spread. How did a bank make money? Well, the bank made a spread too, remember? They paid you 4, charged you 8. We're flipping that. Now the insurance companies pay you between 5 and 6 and charge you right around 5. So what are you doing? Making a spread, but you're making money twice on every dollar because your money never left the account. It continues to earn uninterrupted while you make payments back to your bank. Yes, payments with interest, but when you make a payment back to your bank, how much money's in your bank after you make the payment? All of it, right? So if you had a $500 car payment and you made a $500 payment back to your policy, how much money is in your policy the next day when your check clears? $500. Now let's go back to the traditional bank. When you make a $500 payment to a traditional bank, how much money from that $500 goes into your bank account that you can use the next day? 0. Comprende? Remember, in banks, they lock you into a payment. Now remember, when you're the bank and you take a loan from your bank and you make payments back to your bank, are those payments flexible, unlike the traditional bank? Yeah, you're the bank, you make the rules. If you couldn't make a $500 payment one month, but you could do $250, can you do that? Absolutely. You're in control. It's your bank. You see, we're fixing all the negatives, all the ways that a bank owns you, and we're making it all so you own the bank and you control it all. Lastly, your bank can't be frozen. Well, I mean, I suppose you could freeze your bank, but why would you ever do that? You see, you own the banking system because you created it. That banking system is none other than a specially designed whole life and a process that you use. So therefore, this is very simple. Now I went really fast, but I'm gonna bring it all really simple for you. See this video right here? Check it out. This video will walk you through how to do everything I just explained. It'll show you how the system works. It'll show you how to get all the money back for every single car you buy, drive, and own. And it'll show you how to pay off debts using your own banking system. Today is the day that you become your own bank. Folks, thank you for joining me for this video. I hope you've enjoyed it. We'll see you next time.